Hey guys, this is Average Trader and welcome to week 50 of our trade logging series. Man, it's been, a wild ride ever since I've started, streaming everything I do, or recaps of everything I do on YouTube. And I can't believe it's already been 50 weeks. And in celebration of that, I'm going to be streaming from now on everything I do every single week on Kick as well as my website, right? So if you want a free option to see what I do and maybe ask questions live, you can head on over to kick.com/average trader. We are going to be live every single weekday that the market is open at 8:15 CDT. All right. There is, however, going to still be benefits to joining the chat room at averagetrader.live, and I'll go over that at the end of this video. But for now, if you want a free version of seeing what I do and asking questions and maybe taking my trades, head on over to Kick. With that aside, we made 5R this week. It was a really, really good week. So let's get straight into the first trade that I took. And the first trade that I took was a 3-bar play on the 1 minute, 206.80 by 206.40. And as you can see, it was extremely close to stopping out, right? This bottoming tail, I think, hit 206.45 or something like that. So it was very, very close call over here. But fortunately for us, this topping tail got us out at 1R. So we don't really care if this thing pulls back to 205, right? Because we already got out at 1R. I don't remember specifically if this stock hit 2R, but hit 1R for me and I got 1R out of it. Next trade we took was CVS, 68.30 by 68.50, and we got 2R out of this. We took this off of a 1 minute 3-bar play short. As you can see, very, very clean pattern, right? Once again, had a bit of a retracement, but after we see this topping tail over here and this engulfing red bar, we knew it was going to hit 2R. So we held it for the whole 2R and got out pretty easily. Next trade we took was Apple, 191.25 by 191.95, and we stopped out of this, unfortunately. This was one of the trades where, I don't regret this at all, right? Because at the time we took this, all we saw was a bull sandwich. And as you know, bull sandwiches are a huge sign of bearishness. The fact that this red bar came in engulfing this huge full green bar is a huge sign of weakness, right? Unfortunately for us, as soon as we get in, Apple starts rallying and turns out to be one of the strongest stocks that day. So there's nothing we really could have done about that, and I'm not too upset about this stop out. Next trade we took was Tesla, 161 by 160.25, and we got 1R out of this. We took this off of a very, very aggressive buy setup because the correct entry, if I'm being honest, is 161.25, that area. Because as you can see, lower low, lower low, lower low, we are supposed to get in when it breaks the previous lower low, not when a new bar forms or something like that, right? So we took this a very, very aggressive buy setup, but to my defense, right, we did have a decent stop loss under these bottoming tails over here, which it showed previous strength, right? So we did have a wide enough stop loss, took an aggressive trade, and it paid out for us. I believe Tesla actually went 2R this day, so you could have held on for another R past what I got. So really, really aggressive, but nice trade nevertheless. Next trade we took was Microsoft, and we took this off of a 1 minute breakout or a 5 minute 4-bar play, right? This is one of the instances where two patterns align, which is why we do not trade in a void, right? We look at multiple time frames, but this is one of the instances where you had multiple valid entry and stop losses, right? Just so happened that I chose to take the more aggressive, I would argue, trade, which is 139.50 by 138.50, and I got 10 cent slippage, as you can tell by my entry, which is beyond me, but it is what it is. Took this at 139.60 because of my slippage. Stop loss under these bottoming tails, hit 1R pretty quickly. This is a stock that I remember hitting 2R, right? So had you managed it better, objectively better, right, than me, you would have hit 2R instead of 1R like me. So there was plenty of opportunity to make money on this trade. And the last trade we took this week was Oracle, 120 by 119.25 for this V breakout right here on the 2 minute. As you can see, consolidated at 120. Stop loss is at where this, pseudo, bull sandwich failed. So put the stop loss right here. Our entry is the breakout area at 120, and it hit 1R very quickly. And that is all of our trades this week. This is the part of the video where I explain to you the differences between our average trader.live chat room and our Kick chat room. Once again, they will both start streaming every single day at 8:15 CDT. So you'll be able to see what I do live every single day on both streams. The major difference is that the kick.com stream will have a delay of about 30 to 1 minute, right? 30 seconds to 1 minute. And, sometimes, right, you will have enough time to take trades that I take. And other times, you might be late to an entry. And this is on purpose, right? Once again, the average trader.live chat room is one of the best chat rooms out there. I cannot stress this enough, right? We're the only chat room that has a profit promise guarantee. So for any given month that our callouts do not make money, you get the whole month back for free, right? So, that's the real major difference between the average trader.live and the Kick streams. The Kick will be delayed by 30 seconds to a full minute. On top of that, the average trader.live chat room, I will obviously be paying more attention to, so your questions and comments on kick.com might have a late response, but it is what it is. You kind of get what you pay for, and that is that. Well, that is it for this week's trade logging series. Happy 50th video for everybody watching and to myself. And I will see you guys next week for the continuation of our trade logging series. All right. Have a nice weekend, guys. Bye-bye.